Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin and an upcoming cross. If you guys like the content, please subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So what cross are we referring to? Well, namely, we're referring to the 20-week SMA and the 21-week EMA are about to cross here in a week or two, okay? These two moving averages right here. And you can see them on the chart. The red line is the 20-week SMA, the green line is the 21-week EMA. Now, in a bull market, when things are moving up relatively quickly, the 21-week EMA is above the 20-week SMA. And the reason for that, just from a fundamental perspective, is we know that exponential moving averages are weighting more recent prices more heavier than they are older prices. Therefore, the exponential moving average reacts quicker to changes in price. And because it reacts quicker to changes in price, it tends to lead ahead of the 20-week SMA in a bull market. Sometimes, though, you get crosses of the 20-week SMA and the 21-week EMA. Now, what is the significance of that, if there is one? Okay, and the only way we can understand that is to go look at prior crosses. Now, similar to golden crosses, in an accumulation phase, you're going to get several of these crosses, okay? And it essentially doesn't mean anything. You're just going to get several of them, and it's just natural price fluctuations. Okay, you get several of these crosses. They happen constantly when you're more or less in an accumulation phase. But when you're in, say, a bull market, and you have them cross, what has happened? Well, the first thing we can do is what happened in 2019. It wasn't really that much of a bull market because it only lasted for a few months, and arguably I wouldn't even call it a bull market because there are three things we say that you need to have a bull market. You need a golden cross, you need to be above the 20-week, and then you need at least one successful test of the 20-week moving average, and we didn't get that here. Okay, I mean, we got two of them. We had a golden cross. We know we had the golden cross. We had the break above the 20-week SMA, but we failed to hold it as support, and therefore, in my opinion, this was not a bull market. This was just sort of a fool's rally, if you will. But at the end of the day, when we look at this and we say, you know what, they are about to cross. What happened the last time? If we take this one into account, what happened? What happened at the cross? Well, at the cross of the 20-week SMA and the 21-week EMA, which happened right around here, it took us another 3 weeks to have a wick to the 20-week SMA. And it took us 4 weeks to actually break below it. Okay, so it gave us about 3 to 4 weeks before we actually broke below those moving averages. All right, so that's something to keep in mind. So what would that mean today? Well, if these two moving averages were to cross, say this coming week, and it took us, say, 3 weeks or so to go to the 20-week SMA, then we'd be looking at mid-May. Now remember, the 20-week SMA is already at 44.2K, and it's moving up. It has been moving up by about $2,000 a week. Obviously, that's going to start slowing down because the prices have really started slowing down recently. But it has been moving up about $2,000 a week. It will start to level off. Now, if you go back to 2019, what you'll notice is the 20-week crossed the 21-week, and we sort of held above that 20-week for a while, but then ultimately we were unable to hold it, and we crashed through the following week. And then we held it as resistance for a while, and we sort of just chopped sideways for a number of months. Okay, so that is the last time we saw these two cross in a market that was somewhat, resembling the current market. Although, as we said, not really a bull market because hey, we never tested the 20-week like we did this time. We came above it. We sort of tested it here. We definitely tested it here, and we were off to the races. But let's go back further. Okay, let's go back further to see crosses of these two moving averages to see how they've actually performed in the past. Well, if you go back to the 2016-2017 bull market, we had several of these crosses. In fact, several of them, and they did not ever lead to massive capitulations. It was only the last one that did. Okay, it was only this one, this cross here, that did. But if you look at these, and we're gonna take each one and look to see what happened. So we had a cross here, the 21 week got above it, but then it came back down below. And the reason why it crossed so much in the last bull market of 2016, 2017 is because we just constantly had systematic tests of the 20-week SMA. We never really got that far ahead of ourselves until the very end, right? We would go up and then we would just come back down. And we go up and then we come back down. And then up and back down. And because of this, we just kept testing the 20-week SMA or the 21-week EMA. And because we kept testing it, the 21-week EMA would then react to it quicker, go below the 20-week SMA, and we just kept rinsing and repeating the same process. Okay, we did it here, here, again, there, there. These are all crosses of the 20-week SMA. And then finally we did it in this one. And then that was where we finally started going down. What's interesting to note is, once our 21-week EMA started going down, it looks like that was really the end of it. It started going down here, and that's also when we had a decisive drop below it. So, one of the things that we've said before that we should take into consideration is this bull market so far has not resembled the last bull market. In a lot of different ways, it hasn't. I mean, we haven't really tested the 20-week SMA. As we have discussed, we've more so been testing the 8-week SMA, and until this week, we've been above it. Right now, we're actually below it. This could end up being nothing more than a wick if we're able to get above it by the end of the week, but right now we are below it. So let's go back even further and look at the last bull market before the 2016-2017 one, right? And it was this one. Okay, what do you notice? Well, first of all, we're going to hide the 8-week, and we're going to look to see the crosses. So we had a cross here, and we had a great bull market, which is pretty similar. It's pretty similar to what we had in the current market cycle. Okay, if you take a bar pattern from this test of the 20-week to the local top, let's just take it all the way up to the global top at the time, and we then overlay it today, you can see the similarities. Okay, look at the similarities between, and this is not measured from market cycle bottom, this is just measured from the test of the 20-week moving average. So we're going to overlay that with the test of the 20-week moving average. We moved up on par with what we did back then. Now, what we did back then, of course, was a lot more impressive because, again, the market cap was a lot lower, the returns were a lot higher, more evidence of diminishing returns. If we did not have diminishing returns as measured from the 20-week SMA into the bull market last market cycle, then we would have already gone to $250,000 or so. So again, clear evidence that the returns this cycle are going to be diminished more than likely from prior cycles, okay? And again, if you even go out further from that test of the 20-week, it would imply over $1 million Bitcoin by September, which clearly doesn't really make a whole lot of sense. Okay, clearly doesn't make any sense at all because most people do not think, or there's just no rational way we can look at it and say a Bitcoin's going anywhere close to that by September. So let's go back again and look to see what happened. Okay, so you had the cross here, and then it started turning over, and when they crossed, we entered into a phase. This lasted about, it lasted from once we crossed it, it lasted from June until October of more or less just sideways movement. Okay, I mean, we were basically, at our bottoms here, the weekly candles, $75, $76, at the tops, $128. Not really a whole lot of major moves in these 2 months here, and then we sort of went up maybe 40% or so after this slow move up, and then trended sideways again for a while, and then finally we made a major move later on. But initially what happened when we put on that 8-week moving average, we were holding the 8-week moving average sort of as support, right? Sort of. It's not like the 8-week moving average today seems to be a little bit more acting as support than it was back then. In fact, I've often said I think this is a shorter term moving average. I don't even know which one would look the best in terms of holding it as support. I mean, you can see it here, but even these candles, it doesn't even come that down close to it. So maybe we can look at the 5-week. I'm not going to edit that out. We can look at the 5-week moving average and look at these shorter term moving averages and just realize that we were generally trending up during that time. And then once we did break it, once we broke our shorter term support, which I've just used at the 8-week because that's what we're using today. Once we finally broke it, we did test that 20-week moving average, and in fact we went below it, and we went below the 21-week EMA after they crossed. Okay, so again, you see we went below it after they crossed, not before. Right there. Okay, crossed here, weekly closes below the 20-week SMA the next week, weekly close below the 21-week the week after that, and then we just sort of trended sideways for a while, and just sort of, did our thing until we finally geared up for round 2. So with that said, let's go back to the current day again, because I've been getting a lot of questions about this. They are likely going to cross. Okay, they are likely going to cross. But at the end of the day, they don't really tell you anything that you already know. I mean, they're just lagging indicators, right? They're moving averages. They're just telling you what you already know. Yes, the 21-week EMA is going to cross the 20-week SMA because the 21-week EMA reacts quicker to short-term price movements. And again, if we have a weekly close below the 8-week moving average, one of these shorter-term moving averages, it seems like there's a decent chance we finally test the 20-week moving average this market cycle. The last time we tested it, by the way, was back in September, in October, when we tested it at around $10,000. And we said back then, would it not be somewhat poetic because if you were around crypto during that time, a lot of people were calling for Bitcoin to fill the CME gap at $9,600. I like to refer to them as the Gap Boys. And I said, hey guys, maybe it goes to 9,600, maybe it doesn't. But if you're waiting on 9,600 and it never makes it there, you're basically probably going to be the money that continues to fuel the rally later on because you basically missed the boat. Okay, so again, this was clear evidence that Bitcoin did not have to fill some CME gap on the daily time frame, and again, that could have been the last time we test anything below $10,000. Well, I mean, we'll have to wait and see. But it seems like there is a decent probability that is the last time we go below $10,000. Now, we continue on. We look at the 8-week moving average, and we say, okay, hey, we're below it right now. So what am I looking for? What am I looking for as we navigate this market? Well, the first thing I'll say is, in the grand scheme of the market cycle, I do still think time is on our side. I think we have a long ways to go. If anything, as I've expressed before, the price of Bitcoin is fairly extended from where I think it should be at this point. Doesn't mean it can't keep going up and continuing to stay more extended than I think. But at the same time, I mean, again, we could always come back down, test the 20-week, and then see what's up at that point. We haven't tested it in a long time. It's currently at 44.2K, and it's probably going to be moving up, $1,000 to $1,500 a week. So in a couple weeks, the 20-week SMA could be around $46,000, which isn't even really that far below the current prices, which is kind of crazy when you think about it. I mean, if you take a measured move from the current prices down, we're only about 18 or 19% above the 20-week SMA. And it's only going to get closer if the price of Bitcoin just continues trending sideways and the 20-week SMA continues to catch up. So in that event, in the event that this sort of goes sideways or down, the 20-week SMA will probably continue to come up like this. The 21-week EMA will cross over, and then after the cross, if history were to repeat, then maybe we'll finally test the 20-week SMA, and by the time we test it, I mean, we could be getting close to 50K. I mean, it just depends on how long it takes us to test it, and how high the 20-week SMA is able to go between that, between now and then. Okay, because again, we know it's moving up each and every week. Now, at the end of the day, I do not claim to know what will happen with Bitcoin in the short term. Definitely make no claims for that. I honestly have no idea. I just think it's more important how you react to the market. So my perspective is, if this comes down to the 20-week SMA, I'm sure there will be some bulls there to try to hold the line. Okay? And if it comes below the 20-week SMA, that might make some people think that the entire market cycle is over. But remember, even if it goes below the 20-week SMA, it doesn't necessarily mean the market cycle's over. If history is any indication, we know from 2013 we actually went below the 20-week SMA for a while, but then ultimately we were able to continue along the way. Now remember, a lot of the milestones from 2013, they took long, or they were shorter, they didn't take nearly as long to carry out. For instance, if we were to take a measured move from the market cycle bottom to the top, and if we were to overlay that with our current cycle, so if we were to overlay that with our current cycle, we're gonna pull that all the way across, and let's overlay it. So that was our market cycle bottom right over here, back in like, December of 2018. So you can see that compared to that cycle, we're nowhere even close to keeping pace with, from where we currently are. Nowhere even close to it. And just as another exercise, I don't even have cycle 1 on here because this chart doesn't go all the way back. But just for completeness, we can at least get this cycle so that we can overlay it. And I did this in a video the other day, so this is somewhat redundant here to do this again, but we'll do it anyways. So if we look at say last cycle and compare to where we currently are, and we'll change the color, you can see again that we're actually ahead of schedule. We're somewhat ahead of schedule, and a cooldown period isn't necessarily the worst thing in the world for Bitcoin, in my opinion. Again, at one point this cycle was ahead of cycle 2, but we did not keep pace. Right now we're ahead of cycle 3, but I do not think we'll keep pace. There's also cycle 1, which did something like this, where it went up a lot quicker and a lot sooner. And to better visualize that, we can always just switch that over to another exchange to show that on another video, and we did that a few videos ago. So again, if anything, we're ahead of schedule. Haven't tested the 20-week SMA in forever. I wouldn't mind a test of it sometime in the next several weeks, but at the end of the day, we'll see where Bitcoin takes us, because it has this way of doing what a lot of people don't necessarily expect, and if it just turns around here and then continues the game, then essentially we're kicking the can down the road. When we left the 20-week moving average at $10,000, it's kind of crazy to think that we would be at 44, the 20-week SMA would be at like $44,000, and we still would not have tested it, right? We still would not have tested it. And at the current prices, we're about $10,000 above it, okay? About $10,000 above it. So the main things to consider here: what does the cross mean? What does the cross of the 20-week SMA and the 21-week EMA mean? Well, at a fundamental level, again, it just means nothing more than, hey, the price has calmed down and the 21-week EMA reacts quicker to the changes in price, therefore it's going to come down. The 20-week SMA is going to come up and cross it. Makes sense. It tells us what we already knew. The crosses in a bear market or an accumulation phase don't really mean a whole lot, because the price is just sort of trending sideways, and they're oscillating, sometimes going down and then up. But in these accumulation phases, the crosses don't really mean anything. This cross here happened after a very brief semi-bull market, and it was after the cross that Bitcoin broke the 20-week. Okay, you go back the cycle before, they crossed here, and it was after the cross that Bitcoin broke the 20-week. We're just looking at the data on the charts. Okay, that's all we're doing. We're just looking at the data. Here's another example, actually. I crossed here, and we had our weekly close. Let's zoom in, because we didn't even cover this one. We had wicks below. We don't care about wicks. This one was right on top of it, and we decisively closed below it on the following candle. Okay, so again, we'll take this one step at a time, and we'll see where Bitcoin takes us. I think this is going to be quite the journey of the market cycle. I imagine at some point, people, we will be looking at this cycle peak potentially, sub-cycle peak, where it went to 14K, maybe this one, and then maybe we'll use those two to try to project out a future one, that could be somewhere over here or something. we'll see where things take us, and we'll take it one step at a time. Well, thank you guys for tuning in. Make sure you guys subscribe to the channel if you like the content. Give the video a thumbs up. Also, check out the Telegram channel, which you can find a link to in the description below. We also have the premium list. You can find that at intothecryptoverse.com. You'll get access to weekly reports and videos, the Telegram alerts channel, the Telegram chat room, the risk dashboard, and more. Thank you guys for tuning in, and I will see you next time. Bye.